We last year we sold an immense amount of Bitcoin for one client.
Nine billion, right?
9 billion. We were lucky to sell it, or they were lucky that they sold right into one of the greatest buying frenzies of all time in Bitcoin, where Saylor was buying hand over fist. And so, but even then, we did 9 billion without moving the market more than 3-4%. So there is liquidity in Bitcoin. Now, if everyone comes out and wants to sell $1 billion, 10 guys at once, the market's going to go lower. There's enough people to buy it. It was down 2%. Bitcoin's down about 15% on the year, 40%, a little more than 40% from the high. By no means has this been a good year. If you step way back, by no means it's a disaster. It's just a meh. I use that word MEH, meh. Crypto feels meh.
Bitcoin has once again found itself under pressure. Over the last few days, the world's largest cryptocurrency has fallen back toward the $67,000 level, dropping roughly 4 to 5% in just 24 hours. Investors are watching billions of dollars leave U.S. spot Bitcoin ETFs. Renewed activity from wallets connected to the long-running Mt. Gox bankruptcy estate has reignited fears of additional selling pressure, and escalating tensions between the United States and Iran have pushed many investors into a broader risk-off mindset. For newer investors, price action like this can feel alarming. But according to Galaxy Digital CEO Mike Novogratz, one of the most influential figures in institutional crypto, moments like these are not signs that crypto is broken or that the bull case has disappeared. Instead, they reflect a market that is temporarily lacking a compelling narrative. While capital floods into artificial intelligence stocks, data center companies, and the latest technology trends, crypto finds itself in an uncomfortable middle ground, not collapsing, but not commanding the attention it once did. Yet history has shown that markets move in cycles, and when liquidity eventually stops chasing whatever appears hottest at the moment, it often returns to assets that still possess the strongest long-term fundamentals. In today's video, Mike Novogratz explains why Bitcoin's recent weakness may be far less concerning than many investors believe. He discusses why crypto feels meh right now, why he thinks the industry desperately needs a new story, what Michael Saylor's latest moves could mean for Bitcoin, and perhaps most importantly, why a major piece of crypto legislation in Washington could end up becoming one of the most bullish developments the industry has seen in years. Make sure to watch until the end, because the regulatory update Novogratz discusses could have significant implications for Bitcoin, digital assets, and institutional adoption moving forward. If you enjoy content that breaks down the biggest developments in crypto, be sure to like this video, subscribe to the channel, and let us know in the comments. Do you think Bitcoin has already found its bottom, or is there more downside ahead?
Markets always are about heat, about energy, about people's focus and eyeballs and people telling stories. That's right now it's Korean memory stocks and it's AI and it's data centers, and crypto just is in between stories. There's not a great story for Bitcoin, right? That it could be they're going to cut rates, but they're not going to cut rates, right? We're on hold for a while, even with Warsh. And let me tell you, market structure, which 2 weeks ago I was at 90% past, I'm back down to 60%, right? The stuff that's happening around this administration with the $1.7 billion slush fund, one thing after another just makes it harder and harder for Democrats to say, yeah, we should support this guy. And even though they're not supporting Trump,
the crypto bros don't understand that, Michael, that all of that other stuff that he's doing is hurting the crypto piece of the legislation. Is that fair to say?
Yeah, listen, my part of my role in this process has been going down consistently to DC, and I'm going again next week to try to get Democrats to say, you know what, guys, forget about that. If Trump wants to be, that administration wants to be corrupt, they can be corrupt. There's nothing you can do to stop it because you're not stopping it, right? The Supreme Court can stop it. The Department of Justice can stop it. Congress can stop it. But passing a crypto bill, which is good for America and good for our industry and actually gets this issue off your plate, is still better for you. So plug your nose and do it. They keep getting there. They get to the finish line. They're ready to go. And then something else comes out. And it's like, okay, if we could just take a pause on more hijinks out of this administration. I mean, from the $250 bill. All those things are just like needles. And it makes it politically harder because you really only need these five. Well, listen, you're going to get all but 2 Republicans. And so you need at least 12, probably 14, 15 Democrats. And you'll have this passed. I would have told you 95% that was done after, Ruben Gallegos and the senator from Baltimore, whose name just jumped out of my head, crossed over in committee. And now I think, we've got to whip everyone up again and try to get it's the same logic. Nothing's changed. I really do believe the bill is good for America. It's good for our industry. And quite frankly, it's good for Democrats because it gets crypto there's so much other stuff to talk about. AI regulation, how we think about financing elections in the future. I mean, you could put a list of 15 things more important than this crypto bill for our senators and congressmen to debate. And so I'd like to get them. And they've worked so hard on this. To be fair to everybody, left and right, I haven't seen a bill which is much effort that's been put into it as this one.
It's languishing, Michael, and some of the money's been sucked out of it because of the whole AI trade and more exciting things that are going on momentum-wise. I guess the fear that I have, Saylor is now saying that he may sell some Bitcoin. You think he's going to put a pin in Bitcoin?
Yeah, I'm not sure why. So he raised a bunch of cash, $2 billion, and said, this is to pay by next year to have the dividends. And things were working well. And then out of nowhere, he said, I'm going to use that money instead of paying dividends just to buy back some converts.
Right.
Now, cap structure, wise, converts he owes in dollars, and his prefers he doesn't have to pay. So it's not an official liability in the same way the convert is. But, you miss that preferred once and, sayonara. And so it's, in essence, it's de facto the same thing in my mind, but it's not legally the same thing.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit, you could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth, tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. Novogratz's central argument is that markets are ultimately driven by attention. Capital flows toward whatever captures investors' imagination, and right now that attention is overwhelmingly focused on artificial intelligence, semiconductor companies, and the infrastructure powering the AI boom. In his view, crypto hasn't lost its long-term value proposition, it has simply lost the spotlight. But as the discussion continues, Novogratz points to what could become the industry's next major catalyst. Beyond price action and market narratives, he believes regulatory clarity remains one of the most important missing pieces for institutional adoption. And that brings the conversation to Washington, where lawmakers are debating legislation that could fundamentally reshape how digital assets are regulated in the United States.
Michael, I want to go to one last thing before we leave, and this is a $1.3 billion block trade that was conducted via a dark pool on Tuesday in the BlackRock iShares, the Bitcoin ETF. And I want to talk about that for a second because most of our viewers that chime in, they don't know what a dark pool is. So what's a dark pool, Michael?
Yeah, listen, so markets trade either on an exchange, like equity markets trade on an exchange, or they trade off the exchange and then get crossed. And so this was a giant block that got sold 2% below where the market was trading, which is a pretty tight spread on $1.3 billion.
Right, at that level of volume. Right.
Mm-hmm. I'd say that's world-class execution, or whoever bought it. I'm not sure they made money or not. And so it's an OTC trade in essence that trades off of the main exchange.
Weirdly, you like it, right? Or let me make a statement and then ask you to agree or disagree. I like the transaction meaning it shows that there's a tremendous amount of liquidity in Bitcoin to the extent you want to get into Bitcoin or get out of Bitcoin. Because of that tight spread of execution, it's a sign that the Bitcoin markets are continuing to mature. Is that a fair statement?
Listen, when we last year, we sold an immense amount of Bitcoin for one client.
9 billion, right?
9 billion. We were lucky to sell it, or they were lucky that they sold right into one of the greatest buying frenzies of all time in Bitcoin, where Saylor was buying hand over fist. And so, but even then, we did 9 billion without moving the market more than 3-4%. So there is liquidity in Bitcoin. Now, if everyone comes out and wants to sell $1 billion, 10 guys at once, the market's going to go lower. But there's enough people to buy it. That was down 2%. And so, Bitcoin's down about 15% on the year, 40%, a little more than 40% from the high. By no means has this been a good year. If you step way back, by no means it's a disaster. It's just a meh. I use that word MEH, meh. Crypto feels meh.
Well, I mean, but you see, you are an experienced crypto person. I'm less so than you, but I've been through 2 bear markets now. Pursuant to the 4-year cycle, this is garden variety bear market for Bitcoin. It's not even severe pain for Bitcoin.
It is. The one thing I would question, I know everyone lives and breathes and believes in the 4-year cycle, but that became kind of a self-fulfilling thing. That doesn't have to be fact, right? Yes, the supply contracts a little bit each 4 years. It's not enough, quite frankly, to really change it anymore, to change the trajectory of the market. And so psychology maybe gave people a good excuse to sell. The people that played the 4-year cycle look like geniuses right now, right? If you had sold last November, December, you really, you're cooking with gas, right? You sold 120, it got all the way to 60. It's at 73,000. I think 72,000 is going to hold right where we are. If not, we're going to go back to 60, which will stink. But I think these low 70s are going to hold, and we'll see.
Yeah.
But we need a new story. And so market structure, like I said, I'm going to DC next week. I'm going to put my big smile on and bring candy and flowers. And I do believe, and I'm not doing this just to be self-interested. I literally do believe the market structure bill is good for America and is good for this industry. And I think it's going to get passed still, but man, oh man, it's getting harder.
The Clarity Act, arguably the most important crypto legislation ever introduced in the United States, has officially been placed on the Senate legislative calendar after clearing the Senate Banking Committee with bipartisan support. The bill would establish clear legal boundaries between the SEC and the CFTC, helping end years of uncertainty that have left companies, investors, and developers operating in a regulatory gray area. For years, one of the biggest concerns among institutional investors has not been Bitcoin itself. It has been uncertainty. Large pools of capital want rules they can understand before committing billions of dollars to an emerging asset class. If the Clarity Act ultimately becomes law, it could provide exactly that framework, creating a clearer path for innovation while also strengthening investor protections. That is why Novogratz remains optimistic despite today's market weakness. While short-term traders focus on ETF outflows, geopolitical tensions, and temporary price declines, some of the industry's biggest players are looking further ahead. They see a market that continues to mature, liquidity that continues to deepen, and a regulatory environment that may finally be moving toward clarity instead of confusion. Whether Bitcoin remains near current levels or experiences additional volatility in the months ahead, the bigger picture may be far more important. If regulatory clarity arrives and institutional adoption continues expanding, many investors could look back at this period not as the end of a cycle, but as another temporary phase in the ongoing development of the digital asset ecosystem. We would also love to hear your thoughts in the comments. Will the Clarity Act become the catalyst that reignites the next major crypto rally? If you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and share this video with anyone interested in the future of Bitcoin and crypto regulation. Thank you for watching, and we'll see you in the next video.